Hello everyone, my name is Sweetie Simpit Hui and I am from Taylor's University School of Business. In this video, we would like to introduce all of you a company which called the Hab Seng Industry Sdn Bhd. We are going to introduce basic information of the company, then analyze the recent financial performance and trend of the company, and finally provide our investment advice for investors to consider. Okay, let us begin. Hab Seng Industry Sdn Bhd is an investment holding company in Malaysia, which incorporated in October 1991, and it was listed on Bursa Malaysia in November 2020. Moreover, Hab Seng Industry Sdn Bhd has three subsidiary companies. The major business of the company is the manufacture and the sale of crackers, biscuits, and confectionery food items. Next, the company operates through three segments. It is biscuits manufacturing segment, manufacture and sells biscuits. The beverage segment consists of wholesale of coffee mix and all kinds of the foodstuffs. It is trading division segment markets and distributes the biscuits, confectionery, and other foodstuffs. The most popular product of the company is Hab Seng Special Cream Crackers Chop Ping Pong. It has won Gold and Grand Gold awards from Monday Selection. After 20 years of the development, Hab Seng Industry Sdn Bhd is now one of the largest crackers and biscuits manufacturer in Malaysia. Now, I would like to move on to the analysis of Hab Seng Industry Sdn Bhd's financial performance and operating conditions.
Firstly, we analyzed the financial performance of Hab Seng Industry Bhd based on the calculation of five groups of ratios, which are profitability ratios, liquidity ratios, efficiency ratios, long-term solvency ratios, and the shareholder investment ratios. For profitability, there are four ratios: gross profit margin ratios, net profit margin ratios, return on equity ratios, and the asset turnover ratios. During the year of 2020, due to the pandemic situations and the increase in raw material price, the cost of producing and selling products inevitably increased. So there was a decline on Hab Seng gross profit margin ratios and the net profit margin ratio. However, the asset turnover ratios of Hab Seng has risen slightly over the last year, which indicate that the asset was managed properly to generate profit for the company. For liquidity, there are two ratios, which are current ratios and quick ratios. There was a decrease in cash generated from operation activities, which means Hab Seng has fewer liquid assets to repay his short-term liabilities. For efficiency, there are three ratios: trade receivable collection period ratios, trade payable payment ratios, and inventory turnover ratios. In order to increase the speed of collection period, Hab Seng has reduced the revenue from trade receivables. As a result, there was a decrease in trade receivables collection period, and also we can see that Hab Seng spent less time to pay its payable payment. For long-term solvency, there are two ratios, which are leverage ratios and interest cover ratios. Hab Seng maintained a stable leverage during this period, and assets were manually financed through equity. In addition, there was a significant increase in interest cover ratios. The reason is Hab Seng increased its profit before interest and tax to cover its long-term financial costs. And finally, there are three ratios in shareholders' investment: dividend yield, earnings per shares, and price earning ratios. Hab Seng shows it's capable to generate profit to every ordinary shares. There was a slight increase in earning per shares ratios last year. Moreover, with the increase of market share price, the price earning ratios rose during the year of 2020.
For 5-year trend analysis, we select one region from each group of the region above to calculate the data over the past 5 years. We analyze Hang Seng's development trees by comparing the data with one of the major competitors in Huatai industry Beiherd. This chart shows you a clear comparison of Hang Seng industry Beiherd and Huatai industry Beiherd during the last 5 years on 5 regions, which are gross profit margin regions, current regions, inventory turnover regions, leverage regions, and earning per share. We can see the results from these charts. It is clear isolated that Hang Seng industry Beiherd has a significant advantage in all assets. Due to the pandemic situation, there was a downward trend in gross profit margin regions for both two companies, but the figure of Hang Seng is still higher than Huatai, which means that Hang Seng has a better cost control ability than its competitors. When we look at the inventory turnover regions and the leverage regions, there was a slowly rise from Hang Seng during the last 5 years. On the contrary, Hang Seng's competitor Huatai shows a silent downward trend on inventory turnover. These figures tell us that Hang Seng maintains a good inventory management ability and it able to sell inventory quickly to reduce losses. Move on the character research, we can see that both Hang Seng and Huatai experienced a downward trend during the last 5 years. However, compared with Huatai, Hang Seng's assisted liquidity is a high level, which means it has more cash to repay its short-term liability than Huatai industry Beiherd. From the earning per share region, Hang Seng maintained a relatively stable trend during the last 5 years, while its competitor Huatai experienced a sharp decline and a fluctuation. Thus, we can say that Hang Seng has been able to stable generate profit for its shares.
After we have analyzed the financial performance and trends of Hang Seng, we would like to offer you some advice, recommendations for the investment of Hang Seng Berhad. As an investor, we firstly should focus on the return on equity ratio because there was a higher value of return on equity during the last year, which is favorable for the investors of that company for investing their money in the company's share. Secondly, a low dividend it denotes that the company keeps a profit to reinvest. Same goes to the Hang Seng dividend yield ratio. It has shown a downward trend in the year 2020, which implies that the company is experiencing a growth. Apart from this, the company's future dividend might be higher. Therefore, investors can stay positive about the company's future development. Thirdly, in the past few years, Hang Seng's earning per share ratio has not fluctuated significantly, and there was a slight increase during the year of 2020, which means that Hang Seng was able to make higher profit on each share that investor bought. Also, a raise in price-earnings ratio tells us that investors are more confident to the shares of Hang Seng. In a nutshell, after analyzing all the ratios which are mentioned above, we believe that Hang Seng has an outstanding ability for cost controlling, asset management, paying debt, and most importantly, Hang Seng has a stable ability to bring benefits to investors. It is suggested that investors should invest and buy shares of Hapsing Industry Berhad. Thank you, audience. And that brings us to the end. I'd like to thank you for your time and attention today. I appreciate so much for your interest and attention. Thank you.